All right. Hopefully you should be able to see that. Please let me know if you can't. Anyway, hello everybody. My name is Nancy Tyree. I am the Agency Initiatives Manager with the Indiana Department of Revenue. Also with me today is Danessa Sherman. Danessa is one of the members of our audit team, and she is a lot smarter than I am, which is why she is here. Our auditors work with businesses all the time, and they see a lot more different situations than I do. So she is going to be our lifeline when you inevitably have questions that I cannot answer. So thank you, Danessa. Speaking of those questions, if you have them, please feel free to type them in the chat as we go, and Danessa will be able to answer them in the chat as they occur. So that'll help make sure that we get through all the material we have on time. If we have any remaining time at the end, we can take some questions then. So that is an option as well, but if you want to ensure that you get your question answered, typing it in the chat is probably the best way to do that. So with that, we'll go ahead and jump into our slides. So today we hope to give you some good general information that is going to help you as you build and grow your business. Keep in mind, everything we're talking about today is accurate and up to date, best of our abilities, but sometimes things change, and we don't want you to, if you keep a copy of these slides, lean on those as being the end all be all of state tax information. So keep your ears peeled. At the end of the presentation, we are going to give you ways to contact us, find information, and stay up to date in case things do change down the line. So if you're here, I am assuming that is because you are interested in starting a business, or perhaps you have already launched it. That is fantastic. Small business owners make up a really big portion of the overall sales and withholding tax revenue that's generated in the state of Indiana. So you are the revenue generators of our state. You're what helps keep us going. And it's important that you understand your role in that process. So here's what we're going to be covering today. We're going to talk a little bit about business structures, how to get registered, simple overview of some basic tax types most of you will be dealing with, how to file and pay them. We'll also give you some resources. Along with this, I wanted to mention the Indiana Tax Handbook for New and Small Business Owners. This is on our website. I've provided a link here on this slide for how you can find it. It has more information about everything we're going to be covering today. Also, if you find that you already understand a lot of what we're talking about today, or you just want to know more, you can check out our second presentation that we will be doing. That is called Stay Strong, and it is for businesses that are maybe a little further in the formation process, or just want to know what the next steps would be. We'll be giving that, I believe, next week on March 22nd. Please correct me if I'm wrong. All right, so to start, I wanted to tell you a little bit about who we are, because you may not have ever interacted with the Department of Revenue before. So business owners interact with a lot of different state and federal agencies, as well as a lot of non-government entities. And many of those deal with taxes. It can be a little confusing to know who does what, in fact. So I wanted to start by giving you a little primer on that. The Indiana Department of Revenue, also known as DOR, is the revenue and tax agency for the state of Indiana. So we handle different types of income and trust taxes, and then we direct that money that we collect to other agencies to keep the state running. That being said, business taxes are handled by several different agencies. It might not always be us. So, for example, your federal taxes, those are handled by the IRS. So if you have questions about your federal taxes, that's where you're going to want to go. Additionally, property taxes, those are usually going to be handled by a local government. If you have employees and you need to pay state unemployment tax, that is handled by the Indiana Department of Workforce Development. So those are just a few of the big ones that people sometimes ask us questions about, and we have to refer them to other places because we don't actually handle those things. So now that I have put that out there and told you all the things we don't do, here are a few things we actually are responsible for. So we are a pretty big agency in the state of Indiana. We have around 700 employees. We have 12 locations all across the state, and I believe the Evansville district office would be the one closest to most of you. We also administer over 65 different tax types. I am only going to talk about a couple of those today. That is, true, all of this is accurate, but it's not really the whole story. One of the biggest things I'd love for you to take away from this is that we are a very customer service oriented agency. We really want to help our customers. Our job, as far as we are concerned, is not to collect taxes. It is to support taxpayers, and particularly businesses, because we want to make sure you know what you're doing. As long as you are collecting and remitting the proper taxes in the proper amount, that is what is most important. And frankly, the more knowledgeable that you are about how to do that, the easier our job is, because that means we have to do less collecting and less auditing. So it's in everyone's best interest you understand what you're supposed to be doing. That's part of the reason we give these presentations. So with that in mind, enough about us. Let's talk about you and how to set up your business. One of the first things you're going to need to do is determine your business structure. Some of you might have already figured this out. Some might still be thinking about it. This can be a really complicated decision. I highly recommend enlisting the help of a business expert early in the business formation process, because they can help you look at this from all angles. Your business structure determines a lot of different things. We are going to tell you about the tax part of it, but the individual needs of your business, you might want to seek an expert alternate source to help you figure out what would truly be best for you. That person, they could also check over your work at the start of everything, which could help you save a lot of time and money in the long run. So that could be an accountant, a CPA, a lawyer, something like that. There are also many free and low-cost resources you should think about. The Indiana Small Business Development Center, our host for today's workshop, is really helpful. Or you could consult something like Indiana Small Business Administration. Maybe you have a local SCORE chapter or Chamber of Commerce in your area. Those will be great places to find help. So with that little preamble out of the way, I'm going to cover some of the most common business structures out there. These are not the only business structures you can pursue, just the ones you're most likely to be looking into as you're starting out. Now, these determine a lot of things like your liability exposure, the amount of taxes you pay, how you pay them, and how much control you have over your organization. So we'll start with one of the simplest ones. One person who conducts a business for profit is a sole proprietorship. This is a really common structure for a lot of small businesses because it is very easy to establish compared to a lot of the others. The sole owner in this kind of structure assumes complete responsibility for all liabilities and debts of the business. It's kind of the trade-off with how easy it is to form this. See, there are other structures we'll talk about later on where those liabilities and debts, you as the owner are protected from them. Now, a sole proprietorship is an informal association, so you don't have to register with the Secretary of State. Might still need to register with the Department of Revenue, though. We'll talk about how to do that soon. If you are paying your taxes as a sole proprietorship, the income of the business is reported as part of the owner's personal income. So when you file your individual income tax return every April, this is how you report that income. Because you're reporting it in the same place where you put all your personal stuff, it's really important that you're keeping track of business expenses so you're accurately reporting them on your return. A lot of businesses find it helpful to keep separate personal and business records, maybe even separate bank accounts, whatever helps you make sure that business expenses are business expenses and not personal ones. Another really common structure is an LLC, a limited liability company. So this is created by filing articles of organization with the Secretary of State. And in an LLC, this kind of structure is owned by members, and they are protected from the LLC's liabilities and debts. If a business chooses to be structured as an LLC, it is probably because they offer a lot of flexibility when it comes to how you're going to be taxed. So, for example, an LLC can elect how they want to be taxed. They can, if they qualify under IRS guidelines, choose to be taxed like an S Corp, so they're only taxed once at the employee or membership level, or they could also be taxed like a C Corp or a partnership or a sole proprietorship. There are a lot of different options. So if this is something you're going for, it's probably because you want to take advantage of some of that flexibility. Another kind of structure is called a general partnership. So this is really similar to a sole proprietorship. It's just more people are involved. It is 2 or more individuals who are co-owners of a for-profit business. All partners in this kind of setup are responsible for the liabilities and debts of the partnership, and income is reported on each partner's personal income return. We also have a C corporation. So sometimes this is just called a corporation. These are owned by shareholders, and they are protected from the corporation's debts and liabilities because the corporation itself assumes them. So one interesting thing when it comes to taxes for C corporation is that income is taxed twice here. Once at the corporate level, and then once again at the employee level when a wage is paid, or the shareholder level when it's distributed as a dividend. So some people don't like that, and they actually decide they want to turn their C corporation into an S corporation. So generally, all corporations start as C corporations, and then sometimes businesses do what I just said. They decide they want to become an S corporation. If you want to do that, you have to make sure you meet certain criteria, and then you elect to become an S corporation by filing with the IRS. So they will grant this if you meet certain criteria. I would recommend checking out the IRS website if you want to know all the details of those, but I've included 1 or 2 of them on this slide. If you do this, then income would only be taxed once at the employee or shareholder level. And otherwise, it is pretty similar to a C corporation. It's owned by shareholders. The corporation assumes all liabilities and debts. The shareholders are protected from them. So those are some of the most basic structures that a lot of you will be looking into. Again, not a comprehensive overview, kind of just a brief, quick and dirty things you should know about that. So once you have decided on your structure, you're going to be able to register your business at the state and federal levels. So I will walk you through both, starting with federal. When you register your business with the IRS, you're going to be assigned a Federal Employer Identification Number, or an FEIN. So your FEIN identifies your business to the IRS and to us, the Department of Revenue, as a unique business. It's really important. Your FEIN can also be called an EIN or an FID. There's a lot of different names for it. Regardless of what it is called, please make sure if you are applying for this, do it directly through the IRS. If you Google how to get an FEIN, it's going to show you some .com and .org websites that will offer to apply for this for you, and they will charge you an additional fee to do that. And you don't need that. You can do this directly through the IRS. It's much easier, and you'll save some money if you do it that way. Under federal guidelines, you might not actually need an FEIN. You only need one if you have employees or a qualified retirement plan, your business is a corporation or a partnership, or you file employment or excise taxes. So that is not all businesses. It's a lot of them. But if you have a sole proprietorship, it's small, you don't have any employees, you don't do the rest of those things, you don't need to apply for this. Now, you might choose to do so anyway, because if you don't have an FEIN, anytime you get a form that asks for that number, you would put as the owner your social security number instead. Some people are fine with that. If you aren't, elect to get an FEIN anyway, and that will be the thing that will allow you to avoid that. All right, so in terms of registering your business at the state level, to do that, you can use something called InBiz. So this launched a couple of years ago. It is meant to be a single point of contact for anybody registering a business with the state of Indiana. We recommend using it. It is one of the quickest ways to get started. If you use InBiz, you can register your business with the Indiana Secretary of State, the Indiana Department of Workforce Development, and the Indiana Department of Revenue. So that is a way to handle all those things kind of in one place, very convenient. So I will talk about our part of this, what you do on InBiz when it comes to your taxes. So when it comes to your taxes, you use InBiz to register for those taxes. That's how you get registered with us. And you only need to register for the ones that apply to you. I've listed here on this slide some of the most common tax types new businesses use InBiz to register for. As you can see, you sell a product, you're going to register for sales tax. If you have employees, you register for withholding. And then these last two, these actually only apply to certain locations, counties, jurisdictions. Off the top of my head, I am not sure if Evansville and those surrounding areas have these taxes, but I'm guessing at least one of those jurisdictions does, because a lot of places in Indiana do. The nice thing about InBiz is when you are putting in your information, if, for example, you sell food and beverages or provide short-term lodging, and your business is located in one of those areas that has this kind of tax, InBiz will tell you that. So that way you know you're supposed to register for it. So keep that in mind. I'll talk a little bit more about what those taxes are as we go forward in this presentation. So here's the thing. Before you conduct any taxable sales, you really need to register with or through InBiz, because when you do that, when you register for sales tax, for example, at the same time that you are doing that, you are also registering for something called your Registered Retail Merchant Certificate. So once you get this, once everything is approved, we'll send it to you in the mail. This is the thing that allows you to make taxable sales, basically. And the nice thing is, once you get it, you don't need to do anything in particular to maintain it. All you have to do is file and pay your returns on time with us. If you do that, you are considered in good standing, and we will automatically renew your RRMC every 2 years. So that is the deal with our RRMCs. One last thing, there are actually some businesses that might not need to register to collect any taxes in Indiana. I wouldn't say it's super common, but it does happen. So, for example, let's say you're a sole proprietorship, you don't have any employees, you don't sell food and beverages or provide lodging. So these will not apply to you, except you're probably thinking sales tax, right? But there are businesses that sell only services. And as you can see from this definition we provided, products are the things you sell that require you to register for sales tax. In the state of Indiana, we do not generally tax services. So if you were a clothing tailor or a masseuse or something like that, your business is about offering a service to people and you do not sell any products. You don't sell sewing machines in your clothing tailor business. You don't sell some of the oils you use to massage your clients. You're never going to sell a product, so you don't need to register for sales tax. Now, if you do sell the occasional product, you have to register for sales tax and you have to collect and remit it whenever you sell those products. But like I said, there are just a couple of businesses who maybe don't have to register for any kind of taxes. That's basically what it looks like if it happens. If you have questions about that, that applies to you, let us know. All right, moving on. Oh, one more thing. If you are one of those businesses and you don't collect any sales tax, because you don't need to, you will report the income from your services on your individual income tax return. That's usually all you would have to do because you're probably set up as a sole proprietorship. So I just wanted to let you know how you would actually tell us about the income you're making. Okay, moving on. So depending on the nature of your business, you may need to file several different types of taxes. So I'll cover some of the most common ones small businesses deal with. Before I get into that, I wanted to share with you information about what forms you need to file. So the type of income tax form your business files depends on how your business is organized. You can see that by looking at this page. And I know it's a lot of text, but if you take a look at it, find your structure for your business on the left side, and then on the right, it shows you what form goes along with that structure. So here's why I'm showing you this. I've included the URL on our website for where you can find these tax forms. If your form that you need to file is called an IT-40 or something like that, that is an individual form. So you would go to the individual income section of that website. If it is anything else, an IT-20, an IT-20S, an IT-65, go to the corporate income section. And here's the thing, some of you might not use these forms because you're not going to file through the mail. You can do that. You can print these forms off, write in the information and send it to us via good old snail mail. That's an option, but a lot of people file online. I'll talk to you more about how to do that later. Even if you're going to do that, I highly recommend looking at these forms because when you file online, you're going to have to provide the same information that the forms lay out. So if you've never filed, say, your corporate tax income before, and you want to know what information we are going to ask you for, this is how you know. Look at these forms, go ahead and take advantage of that, figure it out in advance. I highly recommend that. I also wanted to give you a little vocabulary lesson. So this is a term that we at the Department of Revenue use a lot, and I find that the general public barely ever uses it. But I think it's kind of important to help you understand your role in the tax collection process. So trust taxes are things like withholding, sales tax, county innkeepers, food and beverage, and a couple of other things like that. When you collect trust taxes, you become an authorized agent for the state of Indiana. Now, I think that's pretty cool. Maybe you don't, that's okay if you don't, but it means you serve a really important purpose. You are collecting taxes for the state, and then you are holding them in trust and later remitting them to the state. So that's a legal condition you have to fulfill in order to operate a business that deals with one of those taxes in Indiana. And it's really important that you do it correctly because, like I said before, you're an authorized agent of the state of Indiana. So let's dive into a couple of those trust taxes. First of all, if you have employees working for you, you'll need to collect income withholding taxes. So these are state and county taxes withheld from your employees' wages in trust and then submitted to us. Withholding agents, which is what you would be if you have employees, are employers who are required by the IRS and the state to withhold income tax on salaries, wages, tips, fees, bonuses, and commissions. You can report withholding tax electronically on InTime. I'll talk to you about how to do that at the end. Also, I wanted to tell you that not everybody who remits withholding tax does it the same amount. So the handbook gets into more details about how this works. But basically, the average amount of tax that you withhold on a monthly basis determines whether you are required to remit that withholding monthly or annually. If you don't withhold a lot, then we only require you to do it once a year. If you do withhold a decent amount, we're going to want you to do it once a month, because that would otherwise be a lot of income for you to be holding on to for the whole year. And then if you withhold a lot, we ask you to do it a little earlier in the month to make sure everything is processed on time. So you can see how that works with those bullet points on this slide. Now, when it comes to withholding, there are a couple of forms you need to file. One of the most important, and the one I'm focusing on today, is the WH-4. So this is the form that you would supply to your employees. They fill out and you collect from them once they're done. On that, your employees are going to list the number of exemptions they are claiming, and they are going to tell you their county of residence as of January 1st of that year. These two things help you figure out how much to withhold from them. Sometimes employees' situations change, but they do not update their WH-4s because they don't know that they have to. If that ever happens, if maybe they move and you need to start collecting a different county rate, they haven't told you that, or their income situation changes so that they're at a higher tax bracket, but they haven't updated their WH-4 to reflect that, you might not be withholding the right amount from them. And if that means that at the end of the year, they end up owing on their tax return, they'll probably be a little unhappy. So it's honestly in your best interest to check with your employees and see if they need to update their WH-4s on a regular basis, maybe every year or two. I had to update mine very recently, happens to the best of us. As you can see from here, the income tax rate, there is a state and county one. The state income tax rate is 3.23%. County tax rates vary by county. Now, all Indiana counties have them, but some of them are very different, which is why I said before, if your employee moves, you might need to update that WH-4 so that you can withhold at the correct amount. So if you're thinking, how on earth do you actually know how to translate what's on that WH-4 to what I have to withhold? There is a resource we have. It is called Departmental Notice Number 1. It lists all the different county tax rates, and it also instructs you about how to withhold, how to do all those calculations, kind of the simple overview of how to do this. It is really helpful. I would recommend checking that out if you are going to be doing this yourself. Of course, a lot of employers decide that they want to hire a payroll professional to handle this kind of thing on behalf of them, and that is totally fine as well. If you're going to be doing this yourself, that departmental notice is really helpful. Moving on, sales tax. So you're required to register and collect a 7% sales tax if you rent or sell tangible personal property like goods, but not services. Remember, we mentioned that earlier. Or if you rent accommodations like hotels or motels. So as I said, this is a 7% sales tax. The way that Indiana code is written, all retail transactions are subject to sales tax unless a specific exemption is coming into play. So if an item is exempt according to state code, or if a customer has an exemption certificate, that's when you would know that you don't need to collect or remit sales tax for those things for selling. So I'm going to start by talking about items that are exempt according to state code. And we've listed a couple of them here on this slide. I will say there are two things here that I think are kind of complicated. So I want to give you a little more information rather than just letting you read them off this slide. Those are resale items and food items. Okay, so items purchased for resale, these are not subject to sales tax. And that is because sales tax, you want to collect that when a tangible personal property is sold to the end user. So as the store, if you buy from a distributor and then you sell it to someone later on, you're not the end user of that. The person you're going to be selling to is. I'll give you an example. If you own a business that sells office supplies and you decide that you are going to buy paper for your store, you're going to buy it from a distributor. When you sell it in your store, you are going to collect sales tax at that time from your customer. So what that means is when you buy it from the distributor, you're going to give them something called an exemption certificate. That tells them that you are buying this as inventory in order to resell it. So they will know not to charge you sales tax for that item. So that's when it's going to come up. All right, another thing is sales of food. So some foods are subject to sales tax, others are exempt. It can get a little complicated. In general, any food that's meant to be consumed on premises or immediately after is subject to sales tax. That includes all foods sold by restaurants, even for carryout. But food and food ingredients exempt from sales tax include food that is sold in an unheated state by weight or volume as single items, not sold with utensils. So that could include something like a package of chips, a whole piece of fruit, a can of soup, a lot of items that you might get from, say, a grocery store. Now, there is some weird gray middle ground. So if you would like to figure out the nuances of those rules, we have another guidance document that's really helpful. This one is called Sales Tax Information Bulletin number 29. I've provided the link for that there. That gets really into the weeds about taxable versus non-taxable food items. All right, sales tax exemptions. So certain people or groups are exempt from sales tax when they buy from a business. And we've listed a couple of them on the slide. That is things like public transportation providers, nonprofits, state, local, and federal government agencies when they are purchasing something for use for that government entity. So these entities, along with, as we mentioned before, maybe a business buying something for inventory purposes, they're going to use exemption certificates a lot. Default exemption certificate in Indiana is the Form ST-105. This is a multi-use form, can be used by most exempt purchasers. If you receive one of these forms as a business, you are going to check over it, make sure it's signed, make sure that they've indicated what their exempt purposes are. And as long as it looks good, you are going to accept that, and you will not charge a customer sales tax on the item you sell. In order to make sure that you're doing everything correctly, what you need to do is keep a copy of that exemption certificate in your records. That will allow so that if you ever got audited down the line and we looked at your records and saw that there was a sale where you didn't collect sales tax, we would see that exemption certificate that goes along with that sale, and we would say, oh, okay, you're good, you did the right thing. So that is generally when that kind of thing is going to come up. Moving on, let's talk a little bit about use tax. So use tax is the complement or the other half of sales tax. If a seller does not collect tax from the purchaser, but that purchase is otherwise taxable, the purchaser is responsible for remitting use tax to the state of Indiana. Use tax is a 7% tax, so it is the same rate as sales tax. Really, the only difference is if you are purchasing something and you weren't charged sales tax, but perhaps you should have, you're going to remit the exact same amount you would have paid if you just paid sales tax at the time of purchase. You're just doing it a little later after you realize you need to, and you're going to call it use tax instead of sales tax. It is almost completely the same otherwise. So that is the definition of use tax. If you've never encountered this before, I think it can be a little confusing to understand when that might come up. So I'm going to give you two really common examples of when use tax would be due. So the first thing would be if an item is purchased exempt, that exempt purpose later on no longer applies. So let's go back to that office supply store example I had. That person used an exemption certificate to purchase a ream of paper. That's what I told you the example was, and to resell it in their store's inventory. Now, let's say instead of actually reselling it and collecting the sales tax that was owed at the time that they resold it, instead, their office copy machine ran out of paper and they didn't have any. So they went to their inventory area, they took that ream of paper and they used it for their office printer copy machine instead. Now, a business owner can do that, but in doing so, they are reclassifying the paper. If they had known how they were going to use it when they bought it, they would not have been able to claim the exemption because they would have been the end user product. So they should have paid sales tax when they bought it, but through no fault of their own, they did not. So the way they make it correct, they make this situation right, is to remit use tax on the paper. And they do it at the 7% rate of what they paid for the paper, not what the paper would have been marked up as if they had sold it in their store. So it really is the same as if they had just paid sales tax when they bought the paper. The only difference is they're doing it later and they're calling it use tax. Another time this comes up is if you purchase from a vendor in another state and they aren't registered to collect Indiana sales tax. So that happens a lot with online sales. If you buy something from a vendor that's located outside of Indiana, and you look at your invoice or your receipt and you see that they did not charge you sales tax, but you know that item you bought is not exempt, that's a good clue for you that you need to remit use tax for that item. So we talk about this a little more in our Stay Strong presentation and in the handbook. If you have questions, either tune in next week or check out that handbook that has a lot more information. So I want to take a moment now and talk about those two taxes that I mentioned earlier. They only apply to certain locations. These are not statewide. They just happen in a couple of counties and jurisdictions throughout Indiana. So in addition to state sales tax, some counties and municipalities require businesses that sell food and beverages to register for, collect, and remit food and beverage tax. Food and beverage tax rates vary from one area to the other, but they're usually 1 or 2%. Taxable transactions include foods sold and served by caterers, food cooked on the premises and sold at a deli counter, and any transaction where the seller provides utensils. That can include anything from plates and forks to glasses or napkins or straws, okay? As with sales tax and whether it is exempt or it applies to food items, difference about which foods have the associated beverage tax and which are exempt from that, it can get a little sticky. So if you want more information about this tax, where it is that you have to worry about it, what the rates are, and those specific rules, we have a page on our website that kind of lays all of that out. So visit that page. I provided the URL here on this slide. Additionally, there is something called county innkeeper's tax. So some counties require an additional tax on the rental of rooms and accommodations for short terms, meaning periods less than 30 days. So this includes everything from hotels and motels and vacation homes to a gymnasium or a banquet hall, or maybe even a tent or a space in a camper park for a trailer. There are lots of things to apply to. It doesn't apply to long-term rentals. So if you're renting out for more than 30 days, this isn't going to come up. There are a couple of other details that I won't get into. But again, if you want to know all of those details, this is something that might apply to you. We have a guide on our website that gets into county innkeeper's tax and how it's implemented. I would recommend checking that out if you need it. And then I think I mentioned at the start that there are over 65 different tax types in Indiana that we are in charge of. And we've only talked about 4 or 5 of them, I think. Here's several more. So I listed all of these on the slide because these are very specific. Some of you might need to be concerned about these, might need to get involved in collecting and remitting them, might need to register for them to begin with. A lot of you won't need to worry about any of these. Thankfully, the titles are really obvious about what the tax is. If you sell alcohol, you have a restaurant or something like that, yeah, you probably need to register for alcohol beverage excise tax. But if you don't, that's not a thing you need to be concerned with. So check out this list, see if any sound like they might apply to your business. And if they do, find the section for each of these taxes in our handbook. So the New and Small Business Owners Tax Handbook has more information about all of these tax types, including what the rates are, how to register for them, how to file them, when they are going to come up for you in the first place, and a bunch of other good details. All right, so now that we've given you an overview of some of Indiana's business taxes, let's talk about how to file and pay them. First of all, a lot of businesses hearing all of this information think to themselves, oh boy, I'm not sure I can do that myself. Here's the thing, you probably can, but we understand sometimes you just want to hire a professional. I'm not going to try to repair my sink or my oven if they break down. I'm going to hire a professional to do that. So if that's what you're thinking right now, you need to get something called a power of attorney for that individual you are going to appoint to file and pay on your behalf. Power of attorney is what allows them to do that. You can get this by completing a POA1 form. I've provided where that is on our website, or you can fill out an EPOA, which is the exact same thing, but it is electronic, and that is on InTime. So that is the preface for if you want to hire someone to help you with these things, but keep in mind, you absolutely can file and pay your taxes yourself, and I'm going to show you how to do that. So as discussed earlier in the presentation when we talked about withholding, the amount that you owe is going to determine how often and when you need to file and pay other trust taxes. So when it comes to sales tax, some of you might file that annually, some might file it monthly. It's just going to depend on your individual business. Similarly, depending on how your business is structured, an S corporation versus an LLC versus a sole proprietorship, it might file at different times of the year. So what all that means is that there is not one particular date when you are all going to file your business taxes. Vary from one business to the other. So I've provided a link here on this slide that has a list of due dates for different tax types throughout the year. Check that out. That is to be the best way to figure out when you have to file your dang taxes. Also, be aware, sometimes we can change how often you have to file. So particularly when it comes to those trust taxes, sales and withholding, you might start as an annual filer. And if your business grows and you begin collecting more and more of that, you might eventually meet the threshold where you have to become a monthly filer. If that ever happens, we'll send you a letter in the mail. We will give you notice in order to make that change so that you begin monthly filing at the start of the new year. Another thing I wanted to tell you about is that businesses are required to report and pay taxes every filing period. Now that probably sounds obvious, but there are times when businesses don't file because they don't think they have to. So for example, let's say your business is a monthly filer and it's seasonal. So there are months of the year where you have no operations, you have no sales tax, no withholding tax because you're not open. Or perhaps you have registered on InBiz to start your business. You say you were going to start in April, you're ready to go. You know you're going to be a monthly filer because that's how much sales tax you've estimated that you're going to be reporting to us. But in actuality, your business does not get off the ground until June or July. No, that's fine. But when you registered in InBiz, you told us you were going to begin in April. So we are expecting you to file starting then. It's okay if you are a seasonal business or your business hasn't gotten off the ground yet, if you don't have anything to remit to us. You are just going to file something called a $0 return. So you literally go in, enter zero in all of the fields and hit enter. It's very easy to do, but you should, because if you don't do that, we're not going to think that you owe no money. We're going to think that you forgot to file. We might send you an estimated bill. You don't want to deal with that. So please remember to file your taxes every filing period. Also, to remit things like sales and withholding tax and a couple of other things, you are very likely going to be required to do that electronically. So let me show you how. Of course, you can use a third-party service to do this, and I think we'll mention that in just a slide or two. But if you want to file electronically directly with us, we recommend using InTime. So this is our official e-portal. It is part of a new modernization effort that we have been going through over the last couple of years to update our tax systems. And because it's a really big project, we've been moving tax types to our new InTime portal over the last few years. So you can see on this slide, we are almost done. This summer, we are going to officially move all of our tax types that we have onto InTime. So that means we don't have everything there yet. Here's what's currently on InTime. If you want to file or pay sales, withholding, or most of these other types of taxes, you can use InTime to do that. I do want to note, individual income tax is on here, but you can only pay that on InTime. You cannot file your individual income tax return on InTime. But pretty much all of these other taxes, you can file directly on InTime. This is also a way for you to contact our customer service team. You can send a secure message via InTime. You can check historical records for your account. There's a lot of things you can do here. I'd highly recommend setting up an InTime account. Additionally, here is the one portal we have that's called our legacy portal. It is InTax, and this is where those small handful of tax types that haven't made their way over to InTax yet, or to InTime yet, this is where they are. So if you file any of the tax types listed on this slide, you'll probably need to use InTax just the next couple of months until this summer when they officially move over to InTime. If that's going to impact you, don't worry, we will be sending a message to all of our InTax customers well in advance of that shift, letting them know they need to go over there. And like I said, there are some options besides those online portals for how you can file and remit your taxes. First of all, there are just a handful of tax types that aren't currently available to file or pay through any of our online platforms. So if you want to file those, probably your best bet is doing it via the mail. You would literally just go onto our website, find the appropriate tax form, print it off, fill it out, and mail it in to us. That is always an option. Also, you can use non-door platforms to file and pay your tax returns. Some people like to use third-party vendors like ADP or QuickBooks because that is how they do the financials and accounting for their business anyway. And those entities have a way for you to file your state tax returns for the associated taxes you collect at your business directly through them. It's definitely not free. If you're already using them anyway, you're comfortable with them, you don't mind paying that, that is an option and you are welcome to take it. You can also always hire a tax professional. If you do that, they will be filing and paying online on your behalf. All right, we are approaching the end, but before I wrap up, I wanted to give you just a little more information that hopefully will help you as you continue your business. First of all, like I said before, please file and remit your taxes on time every time. If you don't do that, we are probably going to send you a lot of letters in the mail letting you know that there are issues. We will then send you an estimated bill. If you don't respond to any of those things, it can get pretty bad. You could enter our collections process, and at the later stages of that, It could impact your credit score. You could be issued a sheriff's tax warrant or referred to a collection agency, or your RRMC could be revoked because we talked about that earlier in the presentation. If you are not compliant with your taxes, then you're not going to be in good standing with us. So it is really important to accurately file and remit all your taxes on time. Please don't ever let it get to these stages. Before we wrap up, just a couple of resources I thought might be helpful for you to know about. These are pages on our website that have good information for businesses. I specifically wanted to highlight the second bullet point here on this slide. That is our tax library. That's where you can find guidance documents like the two we mentioned earlier, the departmental notice that tells you how to withhold taxes, and the sales tax information bulletin that talked about food and whether it is taxable or exempt. There are a couple dozen other guides in that area of our website on different topics, different taxes, different business types, and the unique situations that they might find themselves in. I would highly recommend just go there, search through the available guides and see if there's any that apply to you. Read through them. They have so much good information there. They're not light reading, but they are very helpful. But any of these pages on our website, check them out, bookmark them maybe. There's a lot of good resources there. Also, here's how you can get updates from us in case anything changes down the line. You want to be contacted when we update relevant informational bulletins or pages on our website. You can sign up for your email updates. You're going to go to the homepage of our website, scroll down just a little until you find a blue box that says subscribe to your email updates. Click on that, enter your email address, and select from the couple of categories that it will give you to receive updates on. I would recommend you select businesses because you are businesses, agency announcements, that will give you an update anytime we send out a press release, which is usually big ticket items. And then the tax bulletin, that is our monthly e-newsletter for businesses. So it has a lot of useful information delivered to your inbox each month, kind of a good summary of different things that have changed or that you should keep an eye on as we move through the tax season. And here are a few resources that are not ours, but are still really helpful. First of all, if you have questions about anything at the federal level, please visit the IRS website or get in touch with them. I've provided here, this first link on this slide is a great place to find additional resources for new businesses on the IRS website. I would say if it's on their website, you're probably going to be able to find it through that link. Also, remember, our presentation today was focused on Indiana. If you want to find out how other state taxes work in other states, you need to contact those revenue agencies for those states. Here's how you can find them. That IRS link I provided in the second bullet point, that has pages for each state, including links to that state revenue agency and other helpful links for people doing business in those states. So that is a great thing to check out as well. And of course, if you aren't already aware of our really amazing host, the ISBDC has a lot of helpful resources and information for businesses that are just starting out on their website. So be sure to check them out if you have not already. And please don't be afraid to get in contact with us if you have questions down the line. Our business phone line is available to you if you'd like to call us. I will warn you, we are in the midst of tax season right now, which means that this month and next, that phone line will be pretty busy. We are open from 8 a.m. to 5 p.m. Eastern time, all weekdays. So the earlier in the morning you call, the better chance that you will be able to get through to us with a minimal wait time. Also, if you have an in-time account, you can send a secure message that way. This is a great way to get a question answered. It's honestly a little quicker sometimes than calling us and being on hold forever. So check that out. You can visit us in person as well. Like I said, the Evansville District Office or any of the other ones throughout the state would be happy to talk to you. If you want to visit us, I recommend scheduling an appointment in advance, which you can do on our website. That will help make sure you see us at the time you want and that we can limit the number of people in the building at one time to just keep everyone safe. All right, that is it. Thank you so much for your time and attentiveness. Now I have been seeing a ton of notifications about the chat, so I'm guessing we have questions and hopefully they've been answered as we go. But if you have any remaining questions, Nessa, that maybe you want to talk about now, or if anybody needs to hop on the mic and get a question answered, you are welcome to do that right now.
The only question I was not able to answer is where the recording will be published. Dominique?
So we're just going to share a link with the attendees who registered. So even if you weren't able to make it today, you'll be able to access it that way.
All right, that sounds good. I'm just glancing through the chat now. Yes, it looks like questions have been answered fantastically. Thank you so much, Danessa.
No problem. If there are any additional questions, I'm still available.
Yeah, we can stay on for another minute or two if needed. I'm going to stop sharing my screen though, so that I can actually access everything. While we were waiting, just to make sure. Oh, I think someone wanted to ask a question. First, go ahead if you do.
Yeah, sorry. I just wanted to ask really quick. Will you guys by chance be emailing out the slides that you presented today?
I'll include the slides as well with the recording link.
Okay, awesome. And we'll just need to copy that recording link in the chat message, or will we get that sent to our email addresses?
You'll get it over email. I'll need time to upload it.
Okay, awesome. Thank you very much. This was very helpful, so I appreciate it.
I'm very glad it was helpful.
Well, thank you guys so much for doing this. I will also include in the follow-up email here a link to the Stay Strong webinar that is happening next week. Nancy, you were correct. It is the 22nd. So same time, 9 o'clock Central Time, 10 Eastern. And if you're not registered for that yet, we'll include the registration link for it. And so that way you receive the Zoom information and can join us there as well. So hearing no other conversation or questions or seeing others in the chat, we'll go ahead and end it there. Again, thank you, Nancy and Danessa. We really appreciate you guys doing this. And thanks to everyone who attended today. Hope you guys enjoy the rest of your day.
Thank you.
Take care.